We have to say, well, does it go into stationary applications or mobile applications? It can't go into both. So we have to make that trade-off. But overall, the demand for total gigawatt hours of batteries, whether mobile or stationary, that will grow in a very, very big way over time. So in conclusion, 2025 really is a pivotal year for Tesla. And when people look back on 2025 and the launch of unsupervised full self-driving, true real-world AI that actually works, I think they may regard it as the biggest year in Tesla history, maybe even bigger than our first car, the Roadster, or the Model S, or the Model 3, or Model Y. In fact, I think it probably will be viewed 25 as maybe the most important year in Tesla's history. There is no company in the world that is as good at real-world AI as Tesla. I don't even know who's in second place. Like, you say, like, who's in second place for real-world AI? I would need a very big telescope to see them. That's how far behind they are. All right.
Great. Thank you very much, Elon. And Bob has some opening remarks as well.
Yeah, I'll talk about things on Earth. As Elon mentioned, in Q4, we set records at vehicle deliveries and energy storage deployments in an uncertain macro environment. We were able to grow auto and energy storage volumes, both sequentially and on a year-on-year basis. For this, I would like to thank the efforts of everyone at Tesla to make this a reality, and our customers who helped us achieve this speed. Coming into the fourth quarter, our focus was to reduce inventory levels in the automotive business. And we accomplished that by ending the quarter with the lowest finished good inventory in the last 2 years. This was a result of offering not only attractive financing options, but also other discounts and programs, which impacted ASPs. While we saw volume growth in almost all regions that we operate in, we hit a new record for deliveries in the Greater China market. This is an encouraging trend since we grew volume in a highly competitive BEV market. On the automotive margin front, we saw a quarter-over-quarter decline, primarily due to lower ASPs and due to the recognition of FSD-related revenue in Q3 from feature releases. Our journey on cost reduction continues, and we were able to get our overall cost per car down below $35,000, driven primarily by material costs. This was despite increased depreciation and other costs as we prepare for the transition to the new Model Y, for which we recently started taking orders in all markets. All our factories will start producing the new Model Y next month. While we feel confident in our team's abilities to ramp production quickly, note that it is an unprecedented change, and we're not aware of anybody else taking the best-selling car on the planet and updating all factories at the same time. This changeover will result in several weeks of lost production in the quarter. As a result, margins will be impacted due to idle capacity and other ramp-related costs, as is common in any launch, but will be overcome as production is ramped. We will be introducing several new products throughout 2025. We are still on track to launch a more affordable model in the first half of 2025, and we'll continue to expand our lineup from there. On a dollar-for-dollar basis, we believe we have the most compelling lineup today compared to the industry, and it will continue to get better from here. As always, all our products come with the best software in the industry, autonomy features, and capable of full autonomy in the future. And despite the premium experience, the total cost of ownership is close to mass market, less premium competitors. Energy storage deployments reached an all-time high in Q4, and resulted in, but declined sequentially. This was a result of higher, growth came from Megapack and Powerwall. Both businesses continue to be supply constrained, and like Elon mentioned, we're trying to ramp up production with Megafactory Shanghai coming online this quarter onwards. While quarterly deployments will likely continue to fluctuate sequentially, we expect at least 50% growth in deployments year over year in 2025. Gross profit and margins in the service and other business was up year over year, but declined sequentially. This was the result of higher service center costs and lower profit from used car business. The businesses within service and other primarily support our new car business, especially through their impact on total cost of ownership. Therefore, while we manage them to be positive on a GAAP basis, we do not expect similar margins as the rest of the business. There's a lot of uncertainty around tariffs. Over the years, we've tried to localize our supply chain in every market, but we are still very reliant on parts from across the world for all our businesses. Therefore, the imposition of tariffs, which is very likely, and any reciprocity will have an impact on our business and profitability. Our operating expenses grew both year over year and sequentially. The biggest driver of the increase was R&D as we continue to invest in AI-related initiatives. The remaining increase came from growth in our sales capabilities and marketing efforts from referral program. For 2025, we expect operating expenses to increase to support our growth initiatives. It is important to point out that the net income in Q4 was impacted by a $600 million mark-to-market benefit from Bitcoin due to the adoption of a new accounting standard for digital assets, whereby we'll take mark-to-market adjustments through other income every reporting period going forward. Our free cash flow for the quarter was $2 billion, and despite CapEx increase of over $2.4 billion in 2024, we were able to generate free cash flow of $3.6 billion for the year. CapEx efficiency is something we are extremely focused on. While we have invested in AI-related initiatives, we've done so in a very targeted manner to utilize this spend to get immediate benefits. The build-out of Cortex was accelerated because of the actually helped accelerate the rollout of FSD version 13. Accumulated AI-related CapEx, including infrastructure, so far has been approximately $5 billion. And for 2025, we expect our CapEx to be flat on a year-over-year basis. In conclusion, like Elon said, 2025 is going to be a pivotal year for Tesla. There are a lot of investments which we've made and will continue to make in this coming year, which will set the pace for the next phase of growth. And, it is something which now I'm getting out of Earth. It is going to be out of this world. And we just are putting the right foundation. And that's all I have.
Great. Thank you very much, Vaibhav. Now we will move over to investor questions, and we'll start with say.com. The first question is unsupervised FSD still planned to be released in Texas and California this year? What hurdles still exist to make that happen? You addressed the Texas piece, I think, already, so.
Yeah, I'm confident that we'll release unsupervised FSD in California this year as well. Yeah. In fact, I think we will most likely release unsupervised FSD in many regions of the country, of the US, by the end of this year. Like I said, we're just putting a toe in the water, then a few toes, then a foot, then leg, then make sure everything's cool. We're looking for a safety level that is significantly above the average human driver. So it's not anywhere like much safer, not like a little bit safer than human, way safer than human. So the standard has to be very high, because the moment there's any kind of, accident with an autonomous car, this immediately gets worldwide headlines, even though about 40,000 people die every year in car accidents in the US. And most of them don't even get a mention anywhere. But if somebody scrapes a shin with an autonomous car, it's headline news.
We want to avoid that.
Yeah. So it's really the only thing holding us back is an excess of caution. But people can suddenly get a feel for how well the car would perform as unsupervised FSD by simply allowing a car to drive you around your city and see how many times did you have to intervene, not where you wanted to intervene or were a little concerned, but how many times did you have to intervene for definite safety reasons. And you will find that is currently very rare. and over time, almost never.
Great. Thank you very much. The next question is, are there any discussions with other auto companies about licensing FSD?
Yes. What we're seeing is, at this point, significant interest from a number of major car companies about licensing Tesla full self-driving technology. What we've generally said is the best way to know what to do is take one of our cars apart, and then you can see where the placement of the cameras are, what the thermal needs are of the Tesla AI inference computer. That's better than us, sending some CAD drawings. And then we're only going to entertain situations where the volume would be very high. Otherwise, it's just not worth the complexity. And we will not burden our engineering team with laborious discussions with other engineering teams until we obviously have unsupervised full self-driving working throughout the United States. I think the interest level from other manufacturers to license FSD will be extremely high once it is obvious that unless you have FSD, you're dead.
Great. Thank you very much. The next question is Optimus now mostly design locked for 2025 production?
Optimus is not design locked. So when I say we're designing the train as it's going to, we're redesigning the train as it's going down the tracks while redesigning the tracks and the train stations.
Yeah, we've all of the answers.
Yeah, it's rapidly evolving. It's rapidly evolving in a good direction. It's pretty damn amazing, actually. The team's doing a fantastic job. We really have by far the best team of humanoid robotics engineers in the world. And we also have all the other ingredients necessary, because you need a great battery pack, you need great power electronics, you need great charging capability, you need great communications, going to have Wi-Fi and cellular connectivity. And of course, you need real-world AI, and then the ability to scale that production to huge levels. So you have to design for manufacturing. The things what other companies are missing is they're missing the real-world AI, and they're missing the ability to scale manufacturing to millions of units a year.
I think that is an underappreciated thing, that industrialization of design is a whole different thing than making a design.
Yeah, prototypes are trivial, basically. Prototypes are easy, production is hard. I've said that for many years. The problem is that there's those who've never been involved in production or manufacturing somehow think that once you come up with some eureka design that you magically can make 1 million units a year. And this is totally false. There needs to be some Hollywood story where they show actually the problem is manufacturing. I've never even heard of one. It just doesn't fit the narrative. The Hollywood thing is it's like some lone inventor in a garage goes eureka, and suddenly it files a patent, and suddenly there's millions of units. But listen, guys, we're missing really 99% of the story. 1% is that old saying of 1%. A product is 1% inspiration, 99% perspiration. But Hollywood shows you the 1% inspiration but forgets about the 99% perspiration of actually figuring out how to make that initial prototype manufacturable, and then manufactured at high volume, such that the product is reliable, low cost, consistent, doesn't break down all the time, and that is 100 times harder, at least, than the prototype.
Then you have to get it there, deliver it.
Yeah, you got to meet all these regulations, and there's a zillion regulators around the world. It's very difficult.
Great, thank you. The next question is also Optimus related. When will Tesla start selling Optimus, and what will the price be?
Well, for this year, we expect to just close the loop with Optimus being used internally at Tesla, because we obviously can easily use several thousand humanoid robots at Tesla for the most boring, annoying tasks in the factory, like the task nobody wants to do, where we have to like beg people to do this task, and then it's like the robot's totally happy to do the boring, dangerous, repetitive tasks that no humans want to do. And that's also actually some of the easiest use cases for us to, have Optimus do things like, like load the hopper, like for, like say in body line, if you're like transporting, pieces of sheet metal to the robot, which is already a robot, the robot welding line for the body, and you just have to nonstop take things out of a from one fixture to another fixture, and it's a very boring job. That's the kind of thing what Optimus could do.
The guy who runs around and dumps all the weld studs in the bins.
Yeah, there's a ton of boring jobs, tedious jobs, dangerous, slightly dangerous jobs that's perfect for Optimus. So we expect to use Optimus for those tasks at our factories, and that'll help us close the loop for improvement this year. It's really with production version 2, which I think launches sometime next year. I'd like it to be the beginning of next year, but maybe it's more like the middle of next year. And then we have to just with a production line that is designed for, on the order of 10,000 units a month versus 1,000 units a month. So like when you design a unit when you design a production line for 1,000 units a month, it takes you a while to actually reach anywhere close to 1,000 units a month. When you design, and for any given production output, it takes you a while to actually reach its potential. But the current line that we're designing is for roughly 1,000 units a month of Optimus robots. The next line would be for 10,000 units a month. The line after that would be for 100,000 units a month. And I think probably with version 2, as a very rough guess, because there's so much uncertainty here, very rough guess that we start delivering Optimus robots to companies that are outside of Tesla in maybe the second half of next year, something like that. But like, so this is such an exponential ramp that it'll go from no one's receiving humanoid robots to these things like coming out like crazy.
We can't build enough.
Well, we're always going to be in the we can't build enough situation. Demand will not be a problem, even at a high price. And then, as I said, like once we're at a steady state of above 1 million units a year, I think the production, and I'm confident at 1 million units a year that the production cost of Optimus will be less than $20,000. If you compare the complexity of Optimus to the complexity of a car, so just the total mass and complexity of Optimus is much less than a car. So I would expect that at similar volumes to, say, the Model Y, which is over 1 million units a year, that you'd see Optimus be, I don't know, half the cost, or something like that. What the price of Optimus is a different matter. The price of Optimus will be set by the market demand.
Great. Thank you very much. The next question is, what is the status on mass production of the Tesla Semi, and how will it impact revenue and scale?
I can take that one. So we just closed up the Semi factory roof and walls last week in Reno. So ahead of schedule, which is great with the weather. In Reno, you never know what's going to happen, but we're prepping for mechanical installation of all the equipment in the coming months. The first builds of the high volume Semi design will come late this year in 2025 and begin ramping early in 2026. But as we've said before, the Semi is a TCO no-brainer. Like it's really similar to Optimus. It's set by how much people pay, and then it as the total cost of ownership, it's much cheaper than any other transportation you can have. So at that point, when we're at scale, it will meaningfully contribute to Tesla's revenue. Well, I think it's difficult to say how much. Anything you want to add, Elon?
No, I mean, I do think Tesla Semi, again, with autonomy, is going to be incredibly valuable. that we actually have a shortage of truck drivers in America. That's one of the limiting factors on transport. People are human, so they get tired, and sometimes, there's, I have a lot of respect for truck drivers because it's a tough job. But because it's a tough job, there's not that many people that want to do it, and there's actually fewer. I believe, my understanding is correct, there are fewer people entering truck driving as a profession than are leaving it.
Yes.
So when you think, exactly. So when you consider, okay, there's more people leaving truck driving as a profession than entering it, well, we're going to have a real logistics problem as time goes by. So autonomy will be very important to meet that need. It'll. I don't know. It's a several billion a year opportunity, which I don't know in this context, is that these days does several billion a year matter? I think it does. Not nothing. It's probably, it's probably like a 10 billion a year thing. Yeah, it's $1 billion a month at some point, probably. But it's all this is going to pale in comparison to Optimus. So yeah, $1 billion a month it's a lot, but it's not. It's going to be like 1% of Optimus or something.
Great. Thank you very much. We already covered the next question in opening remarks. So moving on, is it expected that Tesla will need to upgrade Hardware 3 vehicles? And if so, what is the timeline and expected impact to Tesla's CapEx? I think they're referring to cost there.
They're really asking the tough questions, aren't they?
I guess we haven't stopped working on Hardware 3 yet. We are still making software releases. We released the 12.6 release recently, which was it's like a baby V13, but it's a significant improvement compared to what they had previously. And people are still finding ways to distill larger models into smaller models. So we're not giving up on Hardware 3. We're still working on it. Just the releases will trail the Hardware 4 releases.
Great. Thanks, Joe.
Yeah. I mean, I think the honest answer is that we're going to have to upgrade people's Hardware 3 computer for those that have bought full self-driving. And that is the honest answer. And that's going to be painful and difficult, but we'll get it done. Now I'm kind of glad that not that many people bought the FSD package.
Great. Thanks, Elon. The next question. Has Tesla given up on ramping their solar roof product?
No, we're sorry, Mike. Oh, Mike, go ahead. Yeah.
Oh, yeah, I can take it. Yeah, solar roof remains a core part of the residential product portfolio, and it still remains where it draws a lot of customer interest despite it being premium products. We've worked on multiple iterations of engineering to make the product easier to install and distribute by reducing the SKU count. And more recently, rather than direct installation, we are focused on growth through our nationwide network of certified installers. And many of those, they've been installing solar roof with us for many years.
Yeah, that's actually turned out to be a much better way for is just let the roof, just supply product to the roofing industry. And especially when somebody's is getting a new roof anyway, or building a house from scratch. Obviously, this is by far the most efficient time to put in a solar roof, as opposed to putting a solar roof on a house where the roof still has 20 years of life. That's not economically sensible, but if it's a new house or the roof needs to be replaced anyway, then solar roof can make a lot of sense. And it is a premium product. It's like it's kind of like Model S, Model X or something. It's like it's a premium product. I think it looks really cool. And your house generates electricity, and if you combine it with the Tesla Powerwall battery, then you can be self-sufficient. So even if the grid turns off, for several days, your house still works. And your roof looks awesome. So it's like, I recommend anyone who can afford it, get the Tesla solar roof and the Powerwall. Your family's life might depend on it.
get enough.
And just in terms of convenience, your kids are not going to yell at you because their computers don't work because the power went out and you can't charge your phone.
True story.
Actually happens. Yeah. You literally can't even call anyone because your phone's out of juice.
Okay, thank you very much. The next question was covered in opening remarks, so we will skip that. And the last question from say.com, what technical breakthroughs will define V14 of FSD, given that V13 already covered photon to control?
Well, we've got a hell of a lot further than photons to output. We've been in sort of the nothing but nets situation, nothing but neural nets from photons to controls for a while now. We're just improving the neural nets. I guess we could get into some of the technical details to some degree. I have to say, I continue to be amazed by just how effective autoregressive transformers are at solving a wide range of problems. I mean, Ashok, is there anything you'd like to add there without giving away the sort of family secrets?
I mean, except for things we put on X already. So continue to scale the model size a lot. We scale a bunch in V13, but then there's still room to grow. So we're going to continue to scale the model size. We're going to increase the context length even more. The memory is sort of like limited right now. We want to increase the amount of memory, both like give to even minutes of context for driving. We're going to add audio and emergency vehicles better. Add like data of the tricky corner cases that we get from the entire fleet, any interventions or any kind of like, user intervention. We just add that to the data set. So scaling in basically every axis, like training compute, data set size, model context, and also all the reinforcement learning objectives.
Great. Alrighty. With that, we will move over to analyst questions. So just as a reminder, you will need to unmute yourself to ask your question. The first question will be coming from Daniel Roska from Bernstein. Daniel, please go ahead and unmute yourself.
Hey, good evening, everybody. It's Daniel from Bernstein. Elon, Tesla's share price clearly already includes quite a few of the anticipated benefits you talked about today, yet realizing what you call kind of difficult but achievable will take some time. What are you pushing the Tesla executive team to do differently now to accelerate the innovation in order to realize the value you described for the company?
Well, I mean, we're working on perfecting real-world AI and making rapid progress week over week, if not month, certainly month over month, but often week over week. I spent a lot of time with the Tesla AI team and the Tesla Optimus team. I mean, I go where the problem is essentially. Like, if something, this is, unfortunate. Sometimes like, talk to a Tesla executive, I'm like, hey, we don't see you very often. I'm like, that's because your stuff is working awesome. Your stuff is working really great. Unfortunately, I don't see them very often because I go where the problem is. So, whatever the problem is, what's the greatest challenge that lies ahead? So, obviously, there are many challenges with Optimus. It's a hard problem to solve. Many challenges with vehicle autonomy, but we're making rapid progress in both.
Okay. I mean,
Yeah.
Sounds like you've got a conviction that the pieces you need, right, are in place.
Yeah.
If we kind of go 12 months down the line and we look back, and you had some of those, but maybe what are the kind of 2 or 3 KPIs that would tell you that you're on track and it's going the right way, and the pieces you've put in place are the right pieces, right? That's kind of what I'm looking for. Or other way around, where would it be off most likely in your mind that you say, hey, I need to go back there and I need to change something to enable the team better?
Well, I mean, I think the predictions that I'm making here are going to be pretty accurate. And it's worth noting, like, so sometimes people say, oh, Elon's always late. Well, actually, no, the problem is that the media reports on when I'm late, but never reports on when I'm early. So sure, I'm optimistic, but I'm not that optimistic. there are many cases in the past where we've been early, such as completion of the Shanghai factory, or factory completion has generally been ahead of schedule, not behind. But I like I said, I'm very confident we'll have released unsupervised full self-driving, fully autonomous Teslas in Austin and several other cities in America by the end of this year. That's probably everywhere in America next year, and everywhere in North America at least. I think in terms of next year, our constraint, I think, is likely to be just regulatory. Like Europe really has, for example, Europe is a layer cake of regulations and bureaucracy, which really needs to be addressed. There's this, joke like America innovates, Europe regulates. It's like, guys, there's too many refs on the field. For example, for us just to release supervised full self-driving in Europe, even though it works really well, we have to go through a mountain of paperwork with the Netherlands, which is our primary regulatory authority. Then the Netherlands presents this to the EU in, I think, May. And there's like this big EU country committee. We expect it to be approved at that time, but there's nothing we can do to make that May happen sooner. In fact, nobody seems to do, I guess all the countries would have to somehow vote in some way to have it happen sooner than May. Otherwise, it won't happen sooner than May. So then when is unsupervised FSD allowed in Europe? I'm like, May next year, maybe? I don't know. Well, I have to find out when the EU is meeting again. Sometimes it's a 12-month cadence, sometimes a 6-month cadence. Then in China, which is a huge, gigantic market, we do have some challenges because they won't currently allow us to transfer training video outside of China. And then the US government won't let us do training in China. So we're in a bit of a bind there. But like, a bit of a quandary. So what we're solving that is by literally looking at videos of streets in China that are available on the internet to understand, and then feeding that into our video training so that publicly available video of street signs and traffic rules in China can be used for training, and then also putting it in a very accurate simulator, and so it will train using sim for bus lanes in China. Like bus lanes in China, by the way, one of our the biggest challenges in making FSD work in China is the bus lanes are very complicated. And there's like literally like hours of the day that you're allowed to be there and not be there. And then if you accidentally go in that bus lane at the wrong time, you get an automatic ticket instantly. So it's kind of a big deal, bus lanes in China. So we have to put that into our simulator, train on that. The car has to know what time of day it is, read the sign. Anyway, we'll get this solved. But I think we'll have unsupervised FSD in almost every market this year, limited simply by regulatory issues, not technical capability. And then unsupervised FSD in the US this year, in many cities, but nationwide next year. And hopefully we have unsupervised FSD in most countries by the end of next year. That's my prediction with best data that I have right now.
Great, thank you very much. The next question will come from Adam Jonas at Morgan Stanley. Adam, please feel free to unmute yourself.
Thanks, everybody. So Elon, you've said in the past about LiDAR, that for AVs at least, that LiDAR is a crutch, a fool's errand. I think you even told me once, even if it was free, you'd say you wouldn't use it. Do you still feel that way?
Yes.
Care to elaborate, or just, I have another question?
Look, we even have a radar in the car and we turned it off.
I got it. All right, so you're still, yeah, people think you're crazy, you know, but, for not.
Look, I mean, obviously humans drive without shooting lasers out of their eyes. I mean, unless you're Superman, you know, but like humans drive just with passive visual, humans drive with eyes and a neural net and a brain neural net. So sort of biological, which is, so the digital equivalent of eyes and a brain are cameras and digital neural nets or AI. So that's the entire road system was designed for passive optical neural nets. That's how the whole road system was not designed, and what everyone is expecting that's how we expect other cars to behave. So therefore, that is very obviously the solution for full self-driving as a generalized, but the generalized solution for full self-driving, as opposed to the very specific, you know, neighborhood by neighborhood solution, which is very difficult to maintain, which is what our competitors are doing. Yeah.
I mean, LiDAR doesn't work in the fog, guys.
Yeah, LiDAR has a lot of issues. Like I don't have so like the SpaceX Dragon docks with the space station using LiDAR, that a program that I personally spearheaded. I don't have some fundamental bizarre dislike of LiDAR. It's simply the wrong solution for driving cars on roads.
Right. You understand how LiDAR works. I get it.
Literally designed and built our own LiDAR. I oversaw the project, the engineering of the thing. It was my decision to use LiDAR on Dragon, and I oversaw that engineering project directly. So I'm like, we literally designed and made a LiDAR to dock with the space station. If I thought it was the right solution for cars, I would do that, but it isn't.
Yeah. All right. Just as a follow-up, at CES, you said, I'm paraphrasing, that any AI will be able to do any cognitive task not involving atoms within the next 3 or 4 years. And that would imply, Elon, that before the end of President Trump's term in office, that AI would be moving pretty damn quickly into the physical world, into the world of photons and atoms. And I'm thinking, given your work with the administration, how confident are you that the U.S. will have the manufacturing and the supply base to make good on your excitement about physical AI by the by latter this decade? We seem pretty vulnerable right now. I've seen you tweeting about, Xing, excuse me, Elon, about China, Freudian slip, about China making more drones in a day than the U.S. makes in a year, and all the entanglement of the supply. So what has to happen in the U.S. to make that possible? What's your message, and what can you do about it, and what's relevant for Tesla shareholders? Thanks, Elon.
Well, at Tesla, obviously, we think manufacturing is cool. SpaceX, we think manufacturing is cool. But in general, for talented Americans, they need to, beyond my companies, beyond me and the people and my teams here. In general, we need to make manufacturing cool again in America. And I honestly think people should move from law and finance into manufacturing. That's my honest opinion. We have too much. This is both a compliment and a criticism. We have too much talent in law and finance in America, and there should be more of that talent in manufacturing. At Tesla, we're making sure that we can continue to manufacture our stuff, even in the event of geopolitical tensions rising to very high levels.
Great. Thank you very much. The next question will come from Pierre Ferragu at New Street. Pierre, please feel free to unmute yourself.
Hey, thanks guys for taking the question. So I have a question, Elon, on deploying robotaxis in June in Austin. So that's great news. And I was wondering if it means I can, drive down to Austin in June and try unsupervised by myself with my car. Yeah. Or it's going to be more like your fleet testing it.
It'll be our fleet testing it. That's how sort of toe in the water. We'll be scrutinizing it very carefully, make sure it's not something we missed. But it will be, autonomous ride hailing for money in Austin in June. And then as swiftly as possible, other cities in America. And I expect us to be operating, doing unsupervised activity with our internal fleet in several cities by the end of the year. Then it's probably next year when people are able to add or subtract their car from the fleet. So, kind of like Airbnb, where you can sort of add or subtract your house or your guest room. You can say like add it to the Airbnb inventory or don't add it to the Airbnb inventory. If you're traveling for a month, you can, or whatever the case may be, you can let other people use your house. And then you can, anyway, so that's probably next year because we want to just make sure we've ironed out any kinks. And a lot of it is, it's not like we're not splitting the atom here. It's just a bunch of work that needs to be done to make sure the whole thing works efficiently, that people can order the car. It comes, it's the right spot, does exactly the right thing. All the payment systems work, the billing works.
Okay. But then, so my follow-up question would be, I have a Tesla, I have FSD, and I have to keep my eyes on the road all the time. It's super boring because I don't really need to intervene anymore. And but the really annoying thing is that I can't just check my emails. And so, are you working also on introducing, like a kind of like free unsupervised where I could be eyes off and I would be able to check my email and we just need to, with a 5-second notice, have to go back and keep an eye on what's happening? Or is that something you're working on as well? Because it feels so close with V13 that I wonder if it's something we could expect for this year. It's a very selfish question I ask for myself, to be honest.
Yes. We need to be very confident that the probability of injury is low before we allow people to check their email and text messages. In fact, right now we're in this perverse situation, which you may have encountered yourself, where people will actually go to manual driving to check their text messages. Yep. So the computer doesn't yell at them, and then put it back on autonomous mode once they've checked the text messages, which is obviously less safe, significantly less safe than just letting people check their text once in a while without the computer yelling at them. Yeah. But we just want to be cautious about that at the advent of that. We're in this sort of, neither here nor there, but just for, I think it's not for many months longer. But yeah, we're in this perverse situation where people will turn the car off autopilot so the computer doesn't yell at them, check the text messages while steering the car with their knee and not looking out the window.
And here, like Elon said, right? If you have any problems with the system and when people are not looking, that is a dangerous. And that's what we're trying to avoid. It's the capability is getting there, but it's not fully there. That's why he was using the term of dipping our toe in the water, then getting comfortable, then keep going.
Anyway, it's not far off. But we want to prove to ourselves, and obviously prove to regulators that the car is unequivocally safer in autonomous mode than not. And we're not far off. So this is like low single-digit months.
To the safety aspect, we did publish our vehicle safety report today, and in Q4 was one crash for every 5.9 million miles driven, compared to a crash every 700,000 miles without autopilot.
Right. So we're getting to the point where it's an order of magnitude.
Yeah, it's like 8.5 times safely. So it's just about there. Yeah, it's amazing.
Great. Alrighty, and our last question will be coming from Dan Levi at Barclays. Dan, feel free to unmute yourself.
Great. Good evening. Thank you for taking the questions. Elon, you've talked about the need for proliferation of sustainable transport in the past as part of sort of broader push to sustainable energy. Okay, I know we've heard a lot about President Trump's plans to reverse the EV mandate, and I think there's a view that given regulation is a driver of EV uptake, this could slow EV uptake in the US. So what would be your view on the right policy in the US, given your comments in the past of the need to push for sustainable transport?
At this point, I think that sustainable transport is inevitable. I'm highly confident that all transport will be autonomous electric, including aircraft, and that it can't be stopped any more than one could have stopped the advent of the external combustion engine, the steam engine, or one could have stopped the advent of the internal combustion engine. Like even if you've been the biggest horse advocate on earth, horses are the way, not these newfangled automobiles. You can't stop the advent of the automobile. It's going to happen. And you can't stop the advent of electric cars. It's going to happen. The only thing holding back electric cars was range, and that is a solved problem.
Great.
And then as a follow-up, in the past, Elon, you had made a comment that, you'd be willing to sell cars at effectively no margin to get the cars out there. And there's a comment in the release today of the rate of acceleration of autonomy efforts does impact volume growth. So perhaps you could just talk about, with your efforts on FSD, how we should think about your desire to put more vehicles out in the market to take advantage of your tech advances.
So I'm not sure I understand the question. We have a lot of cars. I mean, we've got millions of cars out there.
So is your question, Dan, that how do we marry our future growth aspects with FSD?
And go ahead and unmute yourself, Dan.
Yeah, more so just how much more aggressively you would be willing to, sell your cars versus, in light of your improvements on FSD.
Well, right now the constraint we're trying to solve is battery production, as opposed to demand. So now Q1 we've got this massive factory retooling for the new Model Y, for example, that obviously has a short-term impact on output. But the problem we're wrestling with, in fact, we're talking that the executive team and I were talking about just before this call was how we've got to figure out how to increase total gigawatt hours of battery production this year, one way or another. That's the constraint on our output.
Great. Alrighty. And with that, I think we are all done for today. So thanks everyone so much for all of your questions. We look forward to talking to you next quarter. Thank you very much and goodbye. All right.
All right, give me 1 second. Let me hop on here, do this. Stop that, get rid of that. Well, let me get my other microphone going here. There we go. Now we're good. All right. Well, hello, Oracles. How are you today? Tesla earnings, and my goodness, we're talking about it in the comments. One of those freak times where Tesla actually went up on earnings, despite missing. Typically in the past, Tesla falls after beating. So one of these rare times. And actually, when it first got released, it dropped significantly. We were down in the low 360s, then rebounded quickly after that. So obviously, we will see right now. We're up right now about 4.5%. And we're up as much as 5% after hours during the call. And again, a lot of times when it comes to Elon talking, it's it's usually like him talking about the future and optimists and things like that is usually like the market's like, we don't care. We don't want to hear anything about that. Tell us what's going on with deliveries. Tell us what's going on with, the next 12 months. So this time around was a significantly different reaction, a much better reaction this time. I still want to see how we're going to be reacting tomorrow, because looking at just the numbers themselves, I'm not looking at year over year numbers because we knew last year was a challenge. I was looking more quarter over quarter. And yes, we're now at, when it comes to production and deliveries, at least deliveries, looking at a run rate of about 2 million. So whether we're going to hit that or not this year, I don't know. Obviously, 7 weeks we're going to be down for the Model Y. Then we'll ramp back up after that. Ramp after that's usually pretty quick to come back up to it. So there's a little bit of production down. Obviously, we're going to get the Model Q coming out. He said they're still on track for this first half of this year. So Q2 will be producing it. That doesn't mean they're going to be delivering it. I still think we're going to be seeing deliveries for the Model Q in Q3. The question we're going to be is how quickly can they ramp that model? So are we even going to hit volume production by the end of the year, or do we have to wait for 2026 to hit volume production on that? Based upon Elon's comments talking about how, 2025 is going to be kind of, we're above ground level. We're really building right now when it comes to the company to take it to the next level when it comes to Optimus, FSD, autonomy, and all of that. 2026 is going to be an awesome year, and then it just gets ridiculous in 2027 and after. So I think this year could still be, when it comes to earnings, could be a little bit more of a challenge. We may see some numbers similar to what we saw last year, maybe not as challenging, but, production ramp is always costly, so you're always going to see margins dipping. We saw auto gross margins of 13.4% this time around. That's the lowest we've seen in several years. So, looking at, auto gross margins at that level, the market not reacting negatively to that tells us that the market is really now focusing more on the autonomy. Elon telling us in the call here that we're going to be seeing driverless autonomy coming in Austin in June. This is awesome. He did clarify and say that it's only going to be Tesla fleet vehicles, which is fine because they can actually start doing this. So it's basically going to be like having a Waymo, but it's going to be Teslas in Austin only, and they're only going to be driven by Tesla. So you're not going to be able to like drive your vehicle down there, or people who live in Austin aren't going to be able to let their vehicle drive around. It'll be Tesla only operated, but still that's a good step in the right direction. And as Elon said, they want to get their toes wet, slowly dip their toes in. Now, not obviously to be bearish on this, but I was making some comments as we were discussing all of this, just, to give some outside perspective on this, I can't think of the word right now, whatever it is. I just not to contradict it. I just want to say, hey, look, looking from an other side is we know we're going to see FUD. We know that there's going to be people out there who are going to intentionally try to create accidents when it comes to Tesla driving these unsupervised vehicles. That's going to happen. Even if we end up seeing these vehicles and we get the proof that it wasn't Tesla's fault or anything, it's still going to be that FUD. That's going to be the problem. Don't forget, we saw that a couple of years ago, same thing happened. Then you had, Dan Looney Bins out there, discussing the whole thing, having his thing, doing his tests on it all. We're going to see something very similar when that comes out. So just brace yourselves for a lot of FUD when that ends up hitting the road. We're going to see it in Austin. We'll probably end up seeing it in Fremont. Tesla's going to be running it based out of their factories. We'll see it in those areas first. And they said by the end of the year, we're going to see it nationwide, or at least wherever it's regulated and allowed. So I think right now, I believe Florida, the entire state, is allowed to have that. So obviously it's going to go state to state, area to area, city to city, whatever it is. So looking at that, that's progress. We're going to see it happen. We're going to have speed bumps and issues along the way. It's natural. We have to get through those. Elon is aware that this is going to happen. So just be cautious of the fact that we will probably end up seeing that as the year goes on. Now going to the Model Q, let me see. Hanif, your Model Y Juniper refresh was surprisingly done quickly. Yeah, so it's going to be done 3 continents. Model Q could be just as fast. Now, don't forget, Model Q is going to be a completely different manufacturing process. So Model Q coming up with that new manufacturing process should be a lot faster. They should be able to ramp quicker, but it's completely new. So they have to get through all of those, production growing pains initially to get to the point where they're going to be able to ramp quickly. Now, once they do get to that point, game on, let's go. Similar to Optimus, how they want to go from 1,000 a month to 10,000 a month to 100,000 a month. We'll get to that point, but even he said it's slow. It's a slow progress to get to that point. Then you kind of speed it up from there, and it's that exponential ramp. So we just need to wait on that. And again, the Model Q coming out, deliveries in Q3. We have to see what's going on with the EV tax credit. Troy Tesla did a breakdown on the numbers, and sounds like we are going to be losing the EV tax credit, which does stink. But when we do hear about that ending, it's not like it's going to end immediately. President Trump will come out and say here's the executive order on it, and he'll say by this date it will end. So obviously Elon being close to him, there may be discussions as to timing of that, what might work for Tesla. Elon said they don't need it, which is fine. So he may not care one way or the other when it ends, but the timing of it could determine what Tesla's total deliveries could be for this year. Because if you end up losing the EV tax credit in Q3, you don't lose a lot of deliveries. You may have a very strong Q3 with a lot of people trying to get their vehicles purchased before they lose the EV tax credit, but then you'd have a weaker Q4. Doesn't matter, you had the majority of the year with the EV tax credit. So the earlier you end up losing the EV tax credit, the lower the deliveries are going to be for the entire year. Now, that's just really this year. Over time, we'll get back to that ramp as Tesla gets the Model Q out there. We get to volume production on that. We're going to see prices coming down, especially if this manufacturing process really is going to be as efficient as they're talking about. They would probably end up switching that over to the Model 3 and the Model Y. Don't know if they would end up doing that for the Model for S and Y or S and X or the Cybertruck, just because of the fact that in that case, they don't produce enough of those to maybe warrant the new manufacturing process. Don't know, but chances are they may end up switching over the 3 and the Y to get those produced and be able to produce them at a cheaper cost. We'll see how that ends up going. Again, a lot of this is just going to be timing, and a lot of it is more near term. So again, you're looking at Wall Street. Wall Street's looking at 12 months. 12 months is now going into January of 2026. Assuming we lose the EV tax credit, they're not looking that far ahead. They're saying, all right, FSD, Elon's telling us, is most likely going to be unsupervised nationwide. Hence why the market, why the stock price is up over 4% right now. We get FSD out at that point, that's going to be awesome. Now we get unsupervised. That there now lays down the groundwork for cybercabs to actually hit the road in 2027, where obviously Elon said it's going to get ridiculous. So now you start looking at the fact that you've got cybercabs coming out in 2027. 2025 is that kind of oddball year where the stock price probably will end up following kind of what happens in the macro. Don't forget, we still have new administration, possible tariffs, possible, global turmoil going on. There's a lot of different things that we could end up seeing. The Fed today came out, they held rates as we expected. So we still do have a higher rate. So Tesla's earnings could still kind of be off. Now, energy obviously doing extremely well. That could continue to push up. And then once you do end up getting unsupervised FSD on the roads and robo-taxis hitting it, when we start seeing the success that happens in Austin and what's probably going to happen in Fremont, then you're going to start seeing a lot more people out there being interested in getting FSD. Now, they did say that there's going to be a major challenge with switching hardware 3 over to newer hardware for all the vehicles who did purchase FSD. So brace yourself for that one, because that's going to be a major hit to CapEx. They still don't know at this point. They didn't want to discuss any numbers, but it will be a major hit, and they will have to update all of those vehicles. So they may end up working something out where they maybe give people credit on, say, hey, purchase a new vehicle, maybe we'll give you 20% off or whatever it is, and give people the option, which would save them a lot of CapEx of having to actually go back and retrofit these vehicles versus getting people to switch over. It's probably something that they're going to end up doing and giving an option to these people, is to get them into a new vehicle, save them, FSD. You're like, we're going to carry your FSD over into this new vehicle. If you do this, you'll have the upgraded hardware and go from there. So I think they're going to end up doing that, but they are going to have to face that challenge when it comes. I do think at that point also, they're going to end up switching over to a subscription-based model only. And then at that point, you cannot purchase FSD in a lump sum. You've got to purchase the subscription model. Then you're going to end up getting what a lot of people are asking for, which is carrying it over from user to user rather than carrying it from vehicle and losing it when you go to buy a new vehicle. It's not going to matter because it's subscription based. It's tied to you as the owner versus the vehicle. So Lots of awesome things that are going on. Let me just jump into the comments here. Alex, I don't know how much of an impact the tax credit will actually have. It will. Don't forget that, EV tax credit, $7,500 federally is huge. There's still going to be the state to state ones, and most of the states that have an EV tax credit will probably end up keeping them. So it's going to go state by state. You'll get different ones in different states. Here in Connecticut, I think it's $2,500. I would have to double check. I know Oregon, and I can't remember what other state it was. There are two that are like massive discounts that you can get. So state by state, you'll be fine. So, I think it's still going to have an impact. And don't forget, that's right off the bottom line too. So that's going to be something that we have to pay attention to. But again, that'll go away over time. Then we'll find our new baseline sans EV tax credits. And that'll be awesome because then we find our new baseline and then we can start growing back up from there. EV tax credit in Canada was paused. I hope it returns in March 2025. Yeah, we'll see. And, I didn't realize that you guys even had one there, obviously, with Trudeau leaving. We'll see what happens after that. So whether they're going to keep it on, hey, maybe if it becomes the 51st state of the United States, we'll see what happens there. I have no idea. But that will be interesting to see what happens. But again, it's one of those things where it's not needed for Tesla. It really more helps all the other manufacturers that are out there who aren't profitable on their EVs as it is. GM had their earnings the other day and they're focusing more on their gas trucks again because that's their bread and butter and that's where they need to make money because they need to make money. These other automotive manufacturers, especially the big three, they're just swamped with debt. They need to get out of all of that debt. In order to do so, they have to sell something that's profitable. And EVs are not profitable. So they're still going to work on their EVs. But, I said it before and I'll say it again, we were going to be seeing, and I talked about it 2 years ago. I don't even remember what videos I was talking about it, but you guys can go back and check them out. There was, talking about how we're going to end up seeing mergers happening in 2024 and 2025. Sure enough, we already saw Honda and Nissan doing it. And I have no doubt we're going to see things happening further. We're going to end up seeing, we've got VW partnering up with Rivian. I have no doubt we're going to see Ford and GM doing the same thing. It's going to be a survival of the fittest. And right now, legacy auto is not fit at all. They're old, fat, and lazy. And it's going to take a lot of work for them to get out of it. And they might have to work with somebody else to make it happen. And even as Elon said, they're working with a lot of manufacturers when it comes to FSD, which I knew was no question it was going to happen. And I have no doubt Ford is one of the major ones that are out there. They won't mention any names, of course, until it actually happens. But, they're talking with a lot of manufacturers, to tell them, hey, this is what, take one of our cars, take it apart, see where we have all of our cameras so that you can put them in the same place so that you can take our software to be able to use it. I'm sure that was another reason why we ended up seeing the stock price going up after hours, because now other manufacturers aren't looking to Tesla to figure out how to put FSD in their cars on their own. They're looking to retrofit the hardware in their vehicles to license Tesla's FSD. That's a huge difference from what we had seen before. So basically, most automotive manufacturers have given up on trying to create their own self-driving, and they're just going to end up fitting hardware in their vehicles to use Teslas. And obviously, in the next couple of years, we're going to end up seeing that transition over, and we'll see those profits coming in. So lots of positives. We don't have specific numbers. Timing could be a little bit of a gray area, but I'm still going to hold by what Elon said. By 2025 is lots of hard work this year. 2026 is going to be awesome, and then 2027 and 2028 are ridiculous. And then I think from there it just continues to go. Obviously there's challenges to face along the way, but even to start the call off, Elon's talking about how Tesla could be, previously he said it'd be more valuable than Apple and Saudi Aramco combined. Now he's saying it could be more valuable than the top 5 companies behind it combined. So that's obviously massive. He's huge, just very, very optimistic on Optimus. Ironically, optimistic. And, I agree. My optimism for Tesla has never waned. My strategy for investing has, but, now I'm at the point in my portfolio where I'm getting back to adding to Tesla, just the way my portfolio was built. Timing wise, it's almost like the universe is like, you did the right thing, and now it's time to get back to this, and you can start putting money back into it. So that's kind of where I'm at. I was partially hoping when I saw it dipping down to the low 360s earlier, I was hoping it was going to maybe keep that tomorrow, but hey, it is what it is. Tesla's going to move a lot in one way or the other. And realistically, looking at this year, again, with the macro environment, with what's going on, we still have, I don't want to say a bubble, but I think we have still a lot of euphoria in the market right now that could end up kind of getting squeezed out this year, and Tesla would just fall naturally with that. Don't forget Tesla being in the S&P 500, being in the NASDAQ, being in a lot of other ETFs that are out there. When you see a broad market sell-off, Tesla's naturally going to dip down with that. It's just the nature of the beast. So when Tesla dips down with that, that could create a nice buying opportunity. I was talking with Alex in the comments about the different gaps that we have down below us, and we still have the gaps down at a lot below us. Actually, I'll bring up the charts for you guys and I'll show you. Lots and lots of gaps still out there. So looking here, we've got 358, which if we kept on dropping, we would have filled that gap. 345, 324, the big one at 255, and then you go back to when we had Q3 earnings. Where is it? There we go. 218. So these are the big, massive gaps. Gaps fill 9 out of 10 times, and there's 1, 2, 3, 4 right there. Then we can go back further, and then you've got, hopefully it doesn't jump. You go back further and you've got the one down to 147. That's the one big one below 218. So, as I explained to Alex, my thoughts on the gaps are, obviously nobody knows what's going to happen. Gaps don't have to fill, but they fill 9 out of 10 times. So I think we end up seeing a macro environment situation that causes Tesla to pull down, and we probably fill that 218 gap. Obviously, I have no idea. I could be entirely wrong on this. So, this is not financial advice. This is just my own personal take on what I'm kind of seeing here. But we see it come down, fill that gap. And then from there, I'm going to kind of assess as to why we filled that gap. Did we fill the gap because there's massive issues that are going on that could continue to carry on further, maybe bring us down to that 147 gap? There is a gap down to 110. Obviously not out here to scare anyone whatsoever, but realistically, whether we fill the gap down to 110, 147, 218, I still have the same outlook for Tesla in the next 5 to 10 years. So with that being the case, if we come down to fill the 110 gap, it's not something to be scared about. That would be like saying, hey, you went out and you wanted to buy, hell, let's talk about eggs and how expensive eggs are right now. Let's say eggs were 75% off. Would you be mad? No, you'd be excited. Let's say Tesla said the Model Y was 75% off. Would you be upset? Hell no. You'd probably go out and buy 2 of them. That's what I'm saying is, don't be upset if the stock price comes down. Be excited because now you're getting a massive 75% discount on the stock, and you can now buy a shit ton more of it. Excuse my French, but you can buy a ton more of it at that level. And then if you still have the same confidence that we're going to be moving back up, which I still do, that means that you're going to be buying more for less, and you'll have that many more shares when we do go back up. So that's just my take on it. Obviously, like I said, not financial advice, but that is what I'm seeing right now when it comes to it. And again, I have no idea. So I do still think we filled the 218 gap at some point this year for reasons that may kind of tie with Tesla. It may be a combination like we've seen in the past, like 2022, where don't forget hedge funds do like to nudge the market further, than it maybe should go. So usually when there's a sell-off, it sells off a bit further. And when it runs up a bit further. So perhaps we see a massive macro pullback this year. And then because we've got the Model Q coming out, maybe the Model Q ramp is slower. There's some FUD that goes around that. Maybe we lose the EV tax credit. That adds to a bit of the FUD. And then, we've got the unsupervised FSD, and then there's an accident and somebody gets hurt or killed, God forbid, in one of these accidents because of it. And again, regardless of whether it was Tesla's fault or not, there's going to be all sorts of FUD storm around this, causing it to sell off. That could be a scenario that causes this to happen. Again, this is just me kind of formulating different scenarios in my head as a potential as to why we could see these things. And they've happened in the past. So to say that they won't happen again in the future is just being naive. But that's what my potential scenario is to get us down to those levels. So that's just kind of what I'm paying attention to. And again, I'm still buying regardless. If Tesla hits the levels in my portfolio needed to hit to buy, I'm going to buy. I'm not waiting for those. I'm not trying to time it. I'll buy. But if we get down to those levels, that just means I'm going to be adding more as we go down. Similar to what I did in 2022. I kept on adding as the stock price just kept on falling and falling until we get down to the $100 level. And then I was adding even more at those points. So that's just kind of what I'm looking at as the potential this year. Let me see. But don't you feel like the people that wanted to buy a Tesla will still buy a Tesla? They will, even if we lose the EV tax credit. But don't forget, there's a lot of people on the fence. There's a lot of people who are buying Teslas because they're like, hey, I need a vehicle. I can buy an ICE vehicle, but because of the EV tax credit, I might as well go get an EV and do that. There are some very savvy people doing the math on it. They'll figure it out, obviously long-term costs, things like that. But then there's the people who are on the fence who are like, I don't know if I want to go with a Tesla, and the EV tax credit is that extra piece that makes them want to buy that EV, buy the Tesla because of the EV tax credit. You lose the EV tax credit. Now they're like, all right, there's no EV tax credit. I don't want to spend that extra $7,500. I'm going to get myself an ICE vehicle. So I think, and then there's other people who maybe don't need to buy a car, but because they can get it with the EV tax credit, they'll go and buy it. And if they lose the EV tax credit, they'll say, you know what, I'll stick with my car for a little longer. Don't forget, recession talk is still on the table. We've been hearing, that's one of the things in my mind is I'm hearing more and more people who had been talking about a potential recession, not talking about it anymore. That kind of tells me that we're now at the point where some people broke and they're like, all right, recession's off. That tells me that maybe recession is actually more imminent than we thought. So if we hit a recession, don't forget, there's a lot of people who won't be getting the Tesla at all because we're in a recession. Even people who could afford a Tesla maybe just be like, I'm going to keep the vehicle that I have and limp along with it and get whatever service I need done to it because I don't know if I'm going to lose my job. I don't know what's going on. So there's still those uncertainties over the course of this year for me. I think we need to get through this year. For me, I need to see what happens as we get through this year before I can definitively say we're not going to be in a recession. Trump, don't forget, Trump just took office. There's a lot of things that he's going to be doing. It's, the presidents are usually the first 100 days. What are they doing in their first 100 days? We're only 8 days in. So we still have 92 more days for, President Trump to come out here and do whatever he wants to do to make a major impact. It's only just started. So just be aware that there's a lot still to come. I would buy a Model Q without an EV tax credit because it'll be low enough for most people. So I believe, based on what Troy Teslick was talking about, based upon what we've heard from Tesla, without the EV tax credit, we're probably looking at about a $36 to $37 US dollar vehicle. So we're looking at the Model 3 right now. The lowest one, I believe, is $43,000. So the Model Q would be about $37,000. So about $5,000 to $6,000 less than the Model 3, which is great, but still over $35,000. So that, as of right now, is what we're assuming the price would be on this vehicle, at least to start. Obviously, hitting volume production, that may end up lowering costs a little bit, and then they might bring the price down from there, but they still don't have pricing power because interest rates are still high. We still have interest rates holding high. The Fed is still telling us that they're going to be holding them higher for longer. That's still going to be impacting Tesla. So even at $37,000, that's still a higher priced vehicle at a higher priced interest rate. That's still going to be painful. But then the timing of it all, again, even if this year is challenging because of that, we are going to be seeing the rates coming down most likely in 2026. You start seeing those rates coming down, that's where we're going to see it. So could be the timing of the Model Q getting to volume production, seeing the price of that coming down naturally, and seeing interest rates coming down as well. All of Tesla's vehicles will be selling more and more after that. And again, Tesla focusing more on FSD and autonomy, for them, that's where they see the real profit and revenue coming in. So, I think by the end of the decade, if everything goes to plan as they want, EVs, their actual EV automotive sales, could be number 3 or number 4 on the list when it comes to revenue. If Optimus does actually ramp the way they're talking about, that's going to be probably number 1. We're probably going to end up seeing autonomy, FSD, Cybercab revenue being number 2. Energy could be number 3, and then automotive revenue being number 4. That's a bull case scenario by the end of the decade. So we'll see if that plays out. So, the talks that we have right now about whether, buying a Model Q EV tax credits realistically are going to be null and void in the next 5 years. But for the next 12 months, they are very relevant. And, I think the Model Q sales will be obviously higher. I think they will end up inevitably passing Model Y in sales, which obviously was the best-selling vehicle in the world last year. So Model Q will end up passing that. It's just a matter of, what's going on with the tax credits and all of that. Let me see. Let me see. We first watched delivery numbers there. Oh yeah, Canada. Yeah, actually, yeah, that's a good point. So you guys are talking about, they got rid of the EV tax credit in January, on January 13th. So Canada, if we could see specifically Canadian numbers on this, that's a good point, Alex. Yeah, if we could see how it impacts Canada's numbers, then we can kind of, see, derive what we could see be in the US when it comes to it. It is a massive incentive. Yeah. Actually, Hanif, just out of curiosity, what was the EV tax credit in Canada? What was the price? Was it $7,500 there, or was it different? Let me see. Dad, as long as Musk keeps making long-term promises for onus, the onus for the stock price will be on retail. Yeah, institutions don't invest in long-term promises. This is true. And I was thinking the exact same thing on the call. Wall Street's always going to be looking 12 months out. And I think part of why we actually saw the stock price going up is because for the first time, realistically, we're looking at some of the things like unsupervised FSD falling within the next 12 months. Obviously, they need to come through with this, but giving us a specific date of June, even if they come through in August, whatever, if we can actually see that happening this year, we're now actually starting to see the reality of autonomy within the next 12 months. Optimus, him talking about that as well. I don't know how much that factored into the movement we saw after hours tonight, but as we move on time down the road and get closer to these things actually coming to fruition, the more institutions will actually start pricing this stuff in. But my dad's right. Until we get to those points, retail, like obviously I'm super excited. Alex and I were talking about, hey, I always wish I, invested more, and every time we get to an earnings call, I always get amped up, and, Elon's great at doing that, from my perspective, but I always like to take that step back and kind of channel my inner dad and say, all right, that's cool that there's all these things in the future. And I do think that they will get there, but we're not there yet. And I don't want to get overexcited and, get that FOMO and put my money in there. Still want to be patient. I still kind of have that Warren Buffett mentality of growth is awesome and growth has its place. And I have growth in my portfolio, but growth is not holding the intrinsic value right now. And there's still potential that it doesn't get to that point. There's a lot of potential that it does, but there's potential that it doesn't. So it's less certain. It's a lot riskier to go with that growth stuff. So that's why I balance it intentionally that way. But again, that's why I have my portfolio set up the way I do, to be able to add more Tesla and not lose out on that growth, but also be cautious. So I'm cautiously optimistic on that. Does insurance cover that FSD accident? So that's the whole thing, is when you get to unsupervised, you're now at level 5 autonomy. Well, I think technically because they're using vehicles with pedals and steering wheels, it's level 4 autonomy. But at that point, Tesla will have to take ownership of that, which is, of course, the huge question. Once you get to that point where you have this, out there, if you don't have a driver in the vehicle, it has to be on Tesla. So Tesla has to take the ownership if anything, God forbid, does happen. If you have a driver in the vehicle, obviously they have the cameras inside the vehicle to see what's going on. Was it driver error? Was it vehicle error? They've got the computers. All of that can figure that stuff out and determine whose error and fault that was. So obviously if it was driver error, it would probably fall on the insurance. But that's a huge question that they're going to end up having come over the next couple of years, is figuring all of that stuff out. Clearly, cybercabs, when those come out, will be all on Tesla. Or is it going to be on Tesla, or is it going to be the owner of a fleet if they have a fleet? Again, I think that's always going to come down to lawsuits, things like that. Was it truly that? Was, the owner of the cybercab not doing things properly? Whatever it is. So I think the insurance questions are always going to be, I don't want to say a gray area, but it's going to be a case by case scenario as to what transpired. If FSD is unsupervised, will Tesla will be needed? Yeah. So Tesla insurance, well, I think you still have to insure the vehicle itself. So I have no doubt you're still going to need to have insurance on the vehicle, whether you're driving it or not. Obviously, you're going to have the option to drive it or not. So you're going to have insurance on the vehicle. It's just a matter of whose insurance covers it. So it's sort of like, if you're going to do an accident right now, if it's not your fault, the other driver's insurance covers it. So if you're not driving your vehicle and Tesla's driving it for you, basically, then it would be Tesla's insurance covering any issues that do happen. But since you still have the option of driving it yourself, you still have to have insurance on it. Obviously, having Tesla insurance itself makes life so much easier, because when you have Tesla insurance itself, everything is streamlined right through Tesla. They can see everything that's going on handled very quickly. So obviously, they have their own challenges going state by state and all the regulations and stuff to get through each one to get insurance on vehicles in every state. So that will be a huge challenge for them as well. But these are all challenges that, don't forget, as Elon stated too, when we switched from horse and buggy over to cars, a whole new world of challenges that nobody even knew what to expect, that we had to overcome. We're just going through another wave of that. Here we are 100 years later going through this exact same scenario we saw 100 years ago. It's a learning curve. It's going to be difficult. There's going to be lots of challenges, like, don't forget, I don't think the seatbelt was at 1956 or whatever is when the seatbelt was put in the vehicles. So basically there was almost 50 years of driving with cars without a seatbelt. Who knows what we're going to end up seeing in 50 years down the road when it comes to the safety of fully autonomous vehicles. All these different things that we're going to have to learn over time. Maybe the learning curve is faster because of AI, but I have no doubt we're going to have some growing pains over the next couple of decades when it comes to autonomy. Recessionary fears respike. There would be a $200 gap to fill at 218 level. Yes, there would. Exactly, Alex. And that's what I'm excited about. No, obviously I'm not excited about a recession. Nobody wants to go through a recession, but it's kind of like part of the cycle. Basically every 10 years we go through a recession. I like to call it like economic spring cleaning. There's a time where, like right now, you look at the Russell 2000, and there's a lot of zombie companies in the Russell. There's a lot of zombie companies out there right now. Zombie companies are companies that don't even have enough money coming in to pay the interest on their debts. So they're really just sucking wind and dragging down the economy and the entire market. So typically when you have higher interest rates flush a lot of those out, but lower interest rates just allow them to keep borrowing money and borrowing money and borrowing money and limp along as they can. When you end up get a breaking point, higher interest rates, typically cause that breaking point. You end up getting a lot of these companies that end up folding and going under. That is kind of like the first few dominoes that end up falling, because those companies obviously have employees. Those employees lose their job. Then there's less job openings at those zombie companies. And then because of that, you end up seeing more and more larger companies. And we've seen a bunch of companies doing some layoffs. You see those layoffs, and then there's hiring freezes. The government, for instance, right now is doing a hiring freeze as well. And there's, hiring freezes in a lot of companies. This is what I saw at Home Depot during the great financial crisis. They didn't lay anybody off, but they had a hiring freeze. And then they just kind of let positions naturally open with, other people leaving the company. And then they eliminated some positions in the company and took those people that were the good ones and filled in the gaps with those people rather than just completely laying them off. So that's kind of one of the first steps that happens. And then you start seeing the layoffs after that, if it lasts a little bit longer. And then because of the fact that there's doing the layoffs, these people who lost their jobs from the zombie companies have nowhere to get work because nobody's hiring because they're at hiring freezes. Then once those companies start laying more people off, there's still nobody hiring. So there's more and more people losing their jobs and employment continues to go up. Right now, we've kind of hit a wall when it comes to unemployment. So it hasn't crept up anymore, but we're now starting to get into the part where I was talking about it earlier. You get to February and you start seeing those seasonal layoffs starting to happen. We saw, American Express and some other companies were talking about doing layoffs in Q3. They were slowly making them all happen. So it doesn't mean that they were completely done. They're still working on laying people off. So it's kind of like a rolling layoff situation that we're going in right now. They announced it and they're still laying them off. So more and more people are losing their jobs. Still need to track that unemployment data. That's going to be a big piece as we move forward as well. Just making sure that we don't hit that recession. But yes, if we do get to that point, brace yourselves, because obviously recession, like I said, hitting Tesla hits the entire market. That's going to hurt everyone entirely. And then less people are going to buy it. So deliveries may be down on that, especially if we lose the EV tax credit, then you're going to have even less people buying. So again, could be that interesting year. 5,000 in Canada. That's actually not bad. 5,000 in Canada. Provinces had their own EV incentives. Yeah, very much like the US, 7,500 plus every state has their own if they do them. So, okay, that was pretty good. So that would be a good way to see if we can. I don't know. I don't even think Troy has Canadian numbers specifically, but like if we had some way of seeing specific Canadian numbers, that would help. But Dad, that's where you want to put your money into the law firms that decide, yeah, who pays. It'll be in courts for years. That was one of the things. And my son, he's going into estate law, so it's not the same as this. But even growing up, I learned very quickly early on that regardless of who wins or loses a case, the lawyers are always winners. And if a lawyer loses a case, they're going to file all sorts of different things to get mistrials, retrials, let's redo this case, whatever they're going to do, and they're going to get more billable hours. That's all lawyers are caring about is billable hours. So if their client loses the case, they'll say, nope, we're going to keep fighting for you. Just keep on paying us. Yeah. So regardless of who wins or loses in those cases, lawyers are always going to win. Are you seeing any signs that indicate a possible recession? Some of the ones that I just mentioned, the layoffs still rolling and going on, what's there. And other than that, prices, inflation still being sticky could cause some of that. And then stagflation would be the bigger issue that some people are concerned about, where, inflation's higher, but unemployment is going higher as well. You really, really don't want that to happen at all. So really just the unemployment numbers I'm still paying attention to. And I think the reason I'm focused on that is looking at now that we have Trump in office, they're starting to roll out the plan that they're talking about. Obviously Elon with Doge, they're already starting to cut a bunch of the budget right now. And, talking about cutting a lot of the different departments that are around the country when it comes to the government, they're saving a lot of money, but it's not like they're going to save this money to pay people to be in jobs that aren't needed. So that's going to be part of their budgetary cuts, is going to be cutting a lot of the jobs in the government. So right now they're doing a full assessment as to what's going on. With that said, they're going to be cutting a lot. Now, they did say that they were going to be, talking about, hey, we'll give you people that we're laying off, 2 years worth of salary, and we'll help you find jobs in the private sector. Whether that comes to fruition or not, I don't know. We still have to wait and see that happen, but I have no doubt there's going to be a lot of jobs that are going to be getting cut in the government. Those jobs getting cut, if they can push them into the private sector, great. But if the private sector is currently on hiring freezes across the board, where are they going to go? Elon on the call talking about, we really need to make manufacturing cool again here in the US. That's great, but when is that going to happen? Because it's not like we have a bunch of manufacturing jobs that are open right now. Manufacturing is outsourced globally for a lot of companies in the US. So you would have to get factories built here in the US for that, and that's going to take some time. So even if you take a couple of years to put a factory up, you're still looking at a couple of years to get these people transitioned from the government jobs or whatever jobs have been lost into manufacturing jobs. I'm all for that happening. I think that's a great route for us to go, but it could take a couple of years. So that couple of years could mean recessionary times because of people not having jobs. Yeah, and then the tariffs and counter tariffs, that's another thing as well that's out there. Obviously it seems like right now Trump is doing a relatively good job of negotiating some of these, kind of playing hardball with a lot of these countries that don't want to do, take back their their immigrants and things like that. So again, we're still early on. We need to see how this plays out. My dad was telling me the other day as well that there's a lot of countries looking to kind of get together and have discussions on what they can do to battle Trump and all the tariffs that he's threatening that are out there. And realistically, as of right now, it doesn't seem like Trump is just broad throwing tariffs out there. He's basically using tariffs as a leveraging tool to get what he wants. And for right now, it seems like what he wants isn't anything that's unreasonable. Saying, hey, you've got some citizens of yours that are living in our country that shouldn't be here. We want you to take them back. If you don't take them back, we're going to give you some tariffs. Obviously, China's a little bit different, wanting to make sure we're kind of playing that political battle when it comes to AI and manufacturing. But otherwise, as of right now, still seems like it's pretty reasonable. We'll see if that continues. And yeah, Amazon laid off 1,800 people after they decided to close 7 fulfillment centers in Quebec. Yeah. Up there, there was a lot of issues going on with union battles. So they just closed their warehouses. Obviously Amazon's a massive giant. So I don't think that's going to affect them significantly, but still that's 1,800 people losing their jobs. It's in Canada, not the US, but still people losing their jobs. I was Tesla green after hours right now. Freak of nature. Ironically, I was looking, I was like, oh, we're at 4.20%, 4.20% up. So I was like, how ironic is that? But yeah, it's apparently, again, I still want to see what happens tomorrow. See if the market still feels the same way tomorrow. But it seems like the market is starting to price in the potential of FSD actually being solved by the end of this year. Typically, moves like this aren't fully retail driven. Obviously we've seen in the past, Tesla can smash earnings and it still sells off. So that's typically more institutional movements. But again, we'll see what happens tomorrow. And I think the next 12 to 18 months is really going to be from a full global basis and Tesla itself. The rest of the challenging times, not to say that it's going to not be challenging after that, but I think we're going to have a lot more clarity, let's say, in the next 18 months when it comes to Tesla. Obviously at that point, if all goes to, plan, FSD will be solved. We will have a better roadmap for cybercabs, because if FSD is solved and we've got these unsupervised robotaxis driving around all over the country, obviously that has laid the groundwork for cybercabs. If Tesla proves this, then when we get to regulations shouldn't be an issue. So that should just smoothly pave the way for cybercabs. We'll also have, what's going on with Optimus. Is Optimus actually on track? He was talking about, their goal is to have 10,000 produced by the end of this year. He said they're most likely going to fall short of that, which is fine because that's still way ahead of the schedule, I thought. And then using them in their own factories certainly helps with, their bottom line. They're going to be saving a lot of money on their bottom line because that's a lot of labor they don't have to worry about paying for when it comes to that. And then if they start actually getting these out to manufacturers and other companies at the end of, second half of 2026, he said that's the potential opportunity. If they get there, that's awesome. But again, in the next 18 months, we'll have more clarity on that. When it comes to the entire economy, we'll have more clarity as the next 18 months as to what is going on. Did we get a recession? Did we not? Are we clear? Are we, unemployment coming back down again? What is going on with inflation? All of these things, I think in the next 18 months, we're going to have a lot more clarity on and a lot more certainty. The market doesn't like uncertainty. And despite the fact that we, at least from my perspective, still have a bit of uncertainty out there, the market's obviously been booming. But I think we're just kind of ready for I think a big domino is going to fall. And I think it's going to be starting with unemployment. And, we saw with DeepSeek over the weekend, just how quickly everything can fall. Now, the thing when it comes to DeepSeek for me is just that there's going to be some companies who are going to do really well if something like this happens. And even if this DeepSeek thing was a fake and it was an actual scam and it wasn't actually as good and efficient as they talked about, that will eventually happen. Just by the nature of how we go, we will eventually get to the point where we have AI functionality that is significantly more efficient, like DeepSeek is, supposedly being. At that point, we will have companies like Tesla, like Meta, like Microsoft, like Apple, who will benefit significantly because they will have to spend less. Their cost of AI production will be significantly less, which just makes it better bottom line for all of these companies, Tesla included. That's all going to happen eventually. So again, we saw how quickly the market can fall on that news. So anything, it's almost like the market is excited and they want to keep running, but they're running so fast, something can come out and trip them and they can fall really hard, really fast. So it's one of those things where I'm just being very cautious about all of the upward movement we've been seeing in the last couple of years. One thing I'm seeing, I'm in high growth city, Clarksville, Tennessee, 45 minutes north of Nashville, is home prices are declining relatively fast here. I'm hoping to be ready to buy the next dip next fall. That's actually one thing too, because obviously the housing market, huge explosion over the last couple of years. And it was in very specific markets. Like for me, I bought my house here in Connecticut, where I was living prior to my job moving me. There was really nothing available. The prices did go up and most of the stuff was just kind of trash, especially when it comes to multifamilies. When I moved over here and it was in the same state, only an hour away, there was a lot of opportunities. It was almost like the market didn't move up in this area. So I got a great opportunity and I got a great house for what I did and the price. And the prices of the houses have gone up a little bit, but not a ton. They've still kind of stayed steady here. But there's some areas in the country like Florida. Florida was a massive one because, zero or almost zero interest rates. People from the Northeast in higher income areas were buying a ton of property down there for cheap and renting it out. And then all of a sudden, these people, down there couldn't afford it anymore because rents kept going up, but their income wasn't going up. So because of that, people were not able to pay rent. Then these landlords who had purchased all of these houses down there at those prices no longer had that income coming in to pay for the mortgages. So they started to have to sell those houses. So it was a very quick bubble that ended up popping relatively quickly because rent prices went up. And there is pockets of area around the country. Austin's another one of them. A lot of these areas that, boomed the most are deflating quite a bit. There's also some areas that are still going back up because they never boomed at the same time. And I know the Nashville area was one of those areas that boomed over the last few years. So definitely take a look at those opportunities, Alex, because I think you could see them, especially like interest rates now, obviously going back up over 7%, despite the fact that interest rates have been coming down by the Fed. Eventually, we're going to get to the point where that housing prices come down and then the interest rates will come down. You'll probably hit a sweet spot where the interest rates will come down and the housing prices haven't gone up entirely yet because they're still coming down on this fall. So you may get a sweet spot. So good luck to you on that one. You like I put the questions in the video. Thank you, Tommy. I do that intentionally because it helps when anybody's viewing to see what's going on and know what the heck I'm talking about. Very fun, informative. I love it. These live streams are so much more fun to me than doing just a regular video. If I could do live streams more often, I would. And actually, I might. I was thinking about it earlier today. I might do more live streams. You guys let me know what you think. Just because typically during the week, I'm pretty burned out after work. But on the weekends, I usually like Sunday mornings, I'll make my 2 or 3 videos and post them for the week. But if you guys want another live stream, let me know and I'll see what I can do to make that happen. Because I know some of you, like the time of day that I do it, you're around the world. So I may end up doing, maybe I'll do like a weekend one earlier in the morning or something so more people can get on. You guys let me know what you think. It is what I said. Musk amps up the retail investor who factors in the promise a year down the road and thinks that should put in the stock today. Yeah. And that's it. Elon does a great job of priming the FOMO. And again, sometimes it's not always wrong. And the retail investors who have a long-term outlook are most likely going to do well. Stock price right now at 406. Sure, maybe it does sell down and fill the gap at 218, but maybe that happens in the next 12 months. But you look out 5 to 10 years, like a lot of the retail investors are looking at, and you could be looking at a stock price of maybe $2,000. So buying it 406, knowing that it could drop 50%, but could also go up a 5x, isn't going to bother them. because those people are also most likely going to be buying at 218 also and just adding more shares at a lower price. So to them, most of them, it doesn't matter. It's the retail investors that are looking for quick money and trying to get rich quick on this move, thinking Tesla's going to do this, and they're not real true investors. Those are the ones I'm concerned about because they're not true investors. If they were truly a long-term Tesla investor, wouldn't matter. Maybe they wouldn't get FOMO. They're probably buying either way, and they're just super excited. Like Peggy's one of them. It's awesome. I love Peggy. But regardless of what's going on in Tesla, he's super bullish and super optimistic all the time, always buying regardless of the price. So to him, he's looking long-term. Doesn't matter what's going on because you look down the road. Let's say it's even $1,000. You're still, a 2.5x from where you're at today. Awesome. That's a great return on your investment. So that's one of the things I look at. So just take a step back, take yourself out of it and ask yourself, what kind of investor are you? Because if you're an investor who is looking more short-term and you're only looking 12 months and you'd be upset if the stock price came down to 218, then you're not an investor. Then you're a swing trader and you're not looking for the right things. My dad's a swing trader. So for him, looking at a stock like Tesla right now where it's at, probably definitely not a buy for him. But if it came down to 218, he would check the levels. Hey, filled that 218 gap. Maybe he's a buyer at those levels to see it bounce up, but he won't stay in it long. He'll take his profit and he'll get out. You have to have those. You have to understand what kind of investor you are and what your mentality is. And once you understand what that is, then you can figure out how you need to invest and learn off of that. Because if you're saying you're a long-term investor, but you're looking at short-term price swings, you're not playing the right game. Honey, if I enjoy this discussion, smash the like button. Yes, please hit that like button, guys. I appreciate it. Alex, I'm on the Kentucky-Tennessee state line. If you go into Kentucky, homes are 10 to 15% cheaper. Yeah. My son in Kansas City, Missouri, I was looking at houses out there, and based on Connecticut, they're about 15 to 20% cheaper than Connecticut. So for me, that's why I'm looking at that as another place to buy. I think my son's going to end up staying out in Kansas City. He loves it out there. So chances are he'd stay there. So I would love to buy a house out there as well. Maybe something he can stay in or whatever it is as an option, and to have it. And that's one of the things, even in state to state, wherever you live, there's a lot of times where people work in higher end areas because they can make more money and then live in lower end areas. It's kind of smart because then you actually have more disposable income to work with to potentially invest to be able to get yourself out of that lower end area in the long term. So similarly, if you have the option to go nationwide, you can do that. Like when you look at the stock market, the money you're getting from the stock market, dividends, capital gains, whatever it is the same regardless of where you live. But if you have more income to invest more into the stock market, then you're just going to have more money to have capital gains and dividends wherever you live. So that's why a lot of people move down to Florida because there's no income tax and it's a lower cost of living down there. Or you go to places like Kentucky or whatever it is, you take your higher income earnings that you have, and then you go to a lower cost of living area and you can live like royalty in some cases. I'm hoping the sweet spot is November, December this year. That was my plan. I was looking at, winter. Typically winter is a better time to buy in the housing market anyway, just because it's usually when a lot of people, nobody wants to move in the winter. It's a nightmare to move in the winter. So people usually take their houses off the market, things like that. And nobody really wants to sell and move anything. So it's usually a slower market then. You have a lot more negotiating ability because like some people have to get out. Yeah, typically that's the time of year. And I'm hoping at that point, the Fed will probably have cut maybe another 50 basis points at least. So, bringing us on maybe under 4%. Maybe at that point, housing interest rates mortgage interest rates will actually start coming down, maybe come back down to that 6% range. I caught the sweet lull last December, so I got a 6.5%. I believe they're still over 7% right now. So yeah, if you can catch that, that would be a good time, and maybe you get under 6%. I consider myself both a swing trader and a long-term investor, mostly long-term with about 15% of swing trading tendencies. I'm pretty close to the same, specifically at call options. I'm still learning that. I'm going to start doing some cash secured puts this year. That's my goal this year, is to learn those, but only have to make money to buy more shares. Yeah, and that's my plan too. And it's probably about 15% of my portfolio. I've got some, and I was talking to my dad about this the other day, or actually today, just about swing trading, because he does more swing trading, but he's, retired, so his tax bracket's lower. Mine is, I think it's either the highest or second highest tax bracket I could be in. So for me, swing trading, especially when it's going to be short-term gains, isn't worth it because I lose so much money to taxes. Dividends are fine because I get taxed a lot less on those. But when it comes to the swing trading, I can still do it. I just want to hold them for at least a year. If I hold them for at least a year, then it's long-term capital gains, and I don't get taxed as much on those. So for me, I'm buying obviously the much better quality companies that are out there. And I see it's like maybe I'm a year down the road and I'm like, hey, you know what? I want to consolidate this money into another one. I'm up, like, there's some of my companies I'm in, I'm like up 40, 50%. So I'm like, hey, you know what? They're doing well. Maybe I'll put a stop in there. I'll take my profits on that one and I'll put the money in something else that's maybe a little bit beaten down. I don't do it with a lot of my portfolio because I'm really looking for long-term dividend growth on this, but there are some stocks that I swing in and out of. Now, when it comes to the options, I'm looking to do some cash secured puts and play that wheel strategy. So pick whatever it is. I may do like SCHD, where I know the options isn't huge, but like I could go out there and I could get small premiums on it, get that little bit of extra cash coming in to be able to buy more of some other things. Because basically I have 3 sections of my portfolio, and dividends I use in those 3 sections of higher income to just buy the longer term dividend stuff. I can do the same thing with the options. I could take that option premium and buy some of that stuff that I want longer term. So I could do all of that and you do the wheel strategy. If you guys don't know, and I'm going to quickly summarize it. So you use a cash secured put to buy a stock or an ETF, and you just keep on cash secured puts until it does catch. If it does catch and you end up buying those shares, you then reverse it and you just do a covered call at the same exact strike price. So you do a cover call on that same exact strike price, and there's obviously different factors. Like if it does end up falling further, you could switch that strike price down, but you're collecting premium both sides and you're using that same, 100 shares or however many contracts you want to do, because one contract is 100 shares. Use that same contract and just keep flipping it back and forth, puts and calls and puts and calls and puts and calls, and basically getting premium on both ends of the coin. Obviously this is something you're only going to be doing it with a security that you want to own, because if you do end up getting stuck with it for some reason, you want to make sure you're in something that you want to own long term. You don't want to be in something where you're like, oh man, I wish I didn't have this. Now I have to sell for a loss, because then you've just completely negated everything that you were in it for. But that wheel strategy is something I really want to get into and learn this year. So I'm going to start playing around with that. Even in San Diego, the prices are falling. The starter homes are all the way down, all the starter homes down to 800K. But he's right. San Diego is obviously a very expensive area to live. But they were probably over $1 million recently, I would have no doubt. So, a lot of the higher end areas that really boomed are starting to come down. Yeah, taxes are if you're looking to implement the wheel strategy, check out TJ and the wheel deal. Oh, cool. Yeah, let me write that down, because there's a few people that I've watched who taught it. TJ wheel deal. Yeah, so I've heard a lot of people explaining how to do it. So for me, like I finally got signed up. I got approved to do options through all 3 platforms I'm on: Robinhood, Schwab, and SoFi. So I can do all of them. And it looks like right now, Schwab, I think, is the only one I can actually do cash secured puts on. So I'll have to do it through Schwab, which is fine. That's my main account. But I'll figure out how to do it on there and just wheel it around there and figure that out. So I'll check him out. Thank you. And yeah, taxes, man. Taxes are a killer. And that's one thing a lot of people don't pay attention to. So even with me in dividends, a lot of the high income dividends that I have right now are going to be just income for me. It's going to be regular income, ordinary income. So I do have to pay attention to that with my taxes. I'm using it strictly to buy more of the long-term stuff, because eventually I will sell out of those higher income plays. So I don't have to worry about the taxes as much. But if you're not factoring in taxes, you're doing yourself a disservice, because when you're looking at capital gains taxes, you're like, hey, cool, I made $100 profit. But if the government's going to be taking 30, 40% out of that, you didn't make $100 profit. You ended up making a $60 profit. So still a profit, but you've got to factor those taxes in there because they suck. That's what he does. Sells puts. If the shares get assigned, he sells cover calls. Yep. Selling calls on growth stocks is dangerous. Yeah. Yeah. So that's why for me, obviously you could get a lot more premium from a company like a Tesla or Palantir and things like that. but there's obviously a lot more risk to go along with it. And the fact that they can fall as far as they do means that you may end up getting stuck with something and have to hold it at a higher price. You know, it's a game that you've got to decide whether you want to play or not and how risky you want to be, which is why for me, typically, obviously, the higher the volatility, the higher the premium you're going to get. The lower the volatility, the lower the premium. So looking at something like an SCHD, which doesn't move a lot, or a lot of people will use the SPY to do it on because, you know, it's relatively pretty steady. It's like being on a giant cruise ship in the ocean. You know, the waves, you'll notice it, but it doesn't really move all that much. But if you're in a little dinghy in the middle of the ocean, you're going to get your ass kicked. So very similarly, when it comes to volatility, you're in a dinghy. If you're doing some growth companies like a Tesla or a Palantir, do the S&P 500 like the SPY or a VU, and you're kind of on a giant cruise ship. So you do something like that, you're not going to feel it as much, but you're also not going to get the premiums as much. You get a lower premium coming back to you, but it's still extra money. Because the way I looked at it was, I don't do it as much now, just because the way I set up my portfolio. But in the past, I used to look at, you know, like, and my dad does it. He'll say, hey, this is a price I'm looking at when it comes to the charts. I says, hey, this is a good support area. If we get down to that support area, I'm going to buy, because from there, there's a good chance it's going to bounce off support and go up. No different than, hey, it's coming down. I'm going to set a buy price right around that support area, and I'll buy it up from there. Well, when you do a cash secured put, you're basically saying, I want to buy 100 shares at this price, but I want you to pay me for it too. And you're basically getting paid to go ahead and do that same exact strategy. You're just doing it with 100 shares. You know, and sometimes, you know, people are just doing 100 shares. They have that kind of money. I don't have that kind of money for all of my stocks. So I have to do something like an SCHD. SoFi be super risky, so I won't try it with that. But it's a lower price thing. But again, that's what you do. And you're saying, hey, I want to buy it $102, but I want to get paid to do that. No different. And then you're going to get assigned to those shares. Cool. Now I've gotten those 102 shares and I got paid $10 for it. Awesome. Now I got an extra $10 and the 100 shares. So, you know, that's just my mentality behind it. Obviously, there's a lot of other factors that go into it and its options and things like that. But realistically, that is the basic mentality. $50 covered calls on Palantir. Wipe my tears with the 300% profit if they get called away. Yeah, no kidding. $50, man. Yeah, that's nice calls on those. Yeah, there's some things that are out there, like, and you never know what's going to happen, because again, you have these things, and if you're not paying attention, or you have something like what happened over the weekend, you know, people who had, you know, calls or whatever on Nvidia, and all of a sudden it drops 17% Monday, like, man, you're getting smoked. So, you know, these are the things to, you know, really just understand when you're getting into options, is paying attention to that stuff. All right, guys, I am going to jump off here. My voice is starting to go. My throat's starting to hurt. But man, tonight was exciting. Thank you guys for being here. Over 100 of you on checking this out. Love hanging out with you guys. Great earnings call. I loved it. Obviously, Tesla up 4.20% right now. How ironic. So perfect. We'll see how it trades tomorrow. And again, long term, I think Tesla is going to be amazing. I think Elon, even if his timing isn't exactly right with what's going to happen in the next few years, I think it is going to happen. And I'll keep you guys posted. I'll constantly tracking, as you guys know, see what's going on with the environment, see if we're going to fill these 218 gaps. I'll keep you guys posted on all of that stuff, because again, I'm excited. Just remember these conversations we have right now, unless something completely collapses with Tesla, if we fill that 218 gap, it's a good thing for long-term investors. And again, I'll be here with you guys right along the way to discuss it. So thanks, guys. As always, you're awesome. And